Morning everyone, and thank you very much for joining. This is the DAX Open. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today is Tuesday, and it's the 11th of January 2022. Just going to bring up our high-risk investment warning. Keep this on screen for a few moments, and then we'll do the commentaries disclaimer. References, and then we'll get started. Hey Howard, good morning, welcome, and thanks for joining. Thank you everyone for joining this morning. Let's bring up our market commentaries disclaimer, and we will have the US Open this afternoon, so you should expect an invite email, and then just click on that, and we'll do that this afternoon. Here's our references: FXCM MarketScope 2.0 and CNBC.com. Let's just bring up our CNBC morning note here, and let's go through this before we get into the chart analysis. And the headline: European stocks set for higher open as investors focus on the next US inflation data. So we're going to get CPI tomorrow, we'll get PPI on Thursday, and actually we'll get retail sales on Friday. That's all for the US. GDP for the UK comes out on Friday morning. I think those are the sort of big calendar events. All right, European stocks are expected to open higher today. Investors are looking ahead to the next US inflation reading on Wednesday. Global markets are focused this week on the latest US inflation data due out this week. The latest US consumer price index is set for release Wednesday, and the producer price index is slated for Thursday. Consumer prices in Europe and the US jumped in recent months. Last Friday, inflation in the Eurozone hit a new high in December, came in at 5% compared with the same month the previous year. Asia Pacific markets were mixed across the board on Tuesday as investors remain concerned about inflation, as well as likely policy tightening from central banks like the US Federal Reserve. Just going back one paragraph, on Friday, I think it's also worth just noting that we had the heightened average wage inflation. The average hourly wage came in much higher than expected. So this CPI on Wednesday, I think, is certainly in the spotlight. PPI certainly in the spotlight. I think I don't expect it to be an outlier, but I think it's going to show that there's an inflation issue that the central banks are going to have to deal with. Interesting headlines on the right here, all these trends. Let's just finish the article. Global investors will be looking for any clues from Fed officials as to the timing of interest rate hikes too. And that's because today there is a big calendar event today. Tuesday, the Fed Chair, Jerome Powell, is going to testify in front of the Senate Banking Committee on Capitol Hill, and this is just in lieu of his renomination as the Fed Chair. So let's see what it says here. Okay, Powell's confirmation. Kansas City Fed President Esther George is also scheduled to speak about economic policy, as is St. Louis Fed James Bullard later in the day. Okay. US futures were flat overnight. This after declines yesterday. The Nasdaq stopped snapped a 4-day losing streak. Data today includes the latest reading for the UK's GDP in 3 months. Data releases. This is Friday. Data releases include the latest reading of UK's GDP in the 3 months to November, and the UK industrial and manufacturing output for November, as well as Greek unemployment data for the same month. I'm fairly sure this is Friday. All right. Let's take a look at the chart. Hey Anna, good morning to you. Happy New Year and all the best for 2022. Thank you very much for joining. Okay, Rob. Okay, yeah. So I think that so Rob's just writing to me. He's had a pretty tough day on the market, sort of down one trade, up the next trade. It's a tough market. We're in a tough market. I think that was kind of what the chart was saying yesterday on this weekly. Let's take a look here and clear up all of this and see if we can come up with something sensible. But it's tough. It's definitely tough trading out there at the moment. All right, let's get this out of the way. And let's take the SSD out as well. Okay. All right. So okay, so you can see that the DAX here dropped. This is the weekly chart, but we've only had one European session, and it really got hammered down to this this low yesterday, and there we go. Okay, so yeah, so we got hammered all the way down to this low, and then at that point the bears lose control and the bulls push price up. Just put in an arrow here. The reference candle is potentially this guy over here. So if we take a look at last week's candle, we've got an inverted hammer, so to speak. The way to take a look at it is bulls took price all the way up to the high of the week. The bulls lose control at the high, and then the bears push price down. And we actually end the week last week with the bears in control, and then we want to assess whether the bears are going to follow through. And there was certainly a threat of that yesterday. So we drew the horizontal in, and you can see we've got two out of three conditions. What are the two conditions? So the first one is we've got the highest high here, which is of course condition one. In other words, the candle to the left is a low high, candle to the right is a lower high. Condition two is the fact that price has taken out the reference candle's low. So it should be about there. Just try and get a better fit. So we've got two, but really without condition three, we don't have anything. Be cognizant of the fact that if we close below this this aqua horizontal, then we may have a reference candle locked in, and if that's the case, then this would be kind of the next the next type of bullish scenario where we have a higher trough followed by a higher peak. But that's at the moment it's really speculation, because we've still got 4 days of trade. So I'm not sure if we do close below this, but the point is, do we get the bears following through from last week? Now, we do have calendar events which can cause the volatility. So we've got Jerome Powell testifying this afternoon, and I think it's quite likely that he just reiterates what we know of from the Fed minutes last week, that the Fed's looking to hike, they're looking to taper probably very soon, they're looking to normalize the balance sheet, and all of that the markets could react to that. So we've got that hanging over us. I think it's at 5 o'clock ZA time, which would be 3 o'clock UK time today. So just be aware of that. There is, of course, another scenario that's potentially setting up here, but we'll only know this at the end of next week, and that is sort of a contra scenario, which would look like this. So, in other words, what happens if, let's just assume today was Friday, and we closed like that. Well, if we had follow-through, bullish follow-through, then we actually got the bullish reference candle over here, and it would look like this. 1, 2, 2, 3, 1, 2, 2, 3. This would kind of be the other case that so we stuck between these two bizarre looking candles, this week and last week's candle. The obvious point is that, well, this week's candle is not complete. So we don't know what this candle is going to be. Is it going to be a big red candle down, or is there actually going to be a bounce off of here? So now this all sounds kind of very sort of confusing. Like, well, Russ, are we going down? Are we going up? The truth is, the market is very uncertain here, and the easiest way for us to see that is actually to combine these two candles, just to understand what the current sentiment is right now. So we're going to look at last week's candle, and we're going to look at this week's candle. We're going to combine them. Okay, so we'll go like this. We'll take last week's high, and we'll take this week's low, which is kind of something like this. And then, so we've combined two candles range into one range. Then we've got to take the open. So the open for the 2 weeks would be the open for last week's candle, which is kind of around about here. Okay, do you understand why we're taking last week's candle as the open? Because it must be the open of the period that we're combining. So if last week's price is the open, well, where's the close? Well, it's got to be the current candle's close, which would be somewhere here. Be something like that. So what kind of a candle do we have when we combine these two? We have a doji, okay? We have a doji. Now, what's a doji? A doji is a candle of uncertainty, right? So we've kind of got this price action where the bulls have taken price right up, they've lost control. We've got this price action where bears have taken price right down, or they've lost control. And where are we? Well, we pretty much where we started. So it's certainly tough trading out there. It's quite volatile as well, right? So you've had a price up, down, and we flat. So this is the environment that we are operating in. Because it's such an uncertain environment, we've got to understand. I think this is the crux. This is the most important part of all of that. What is the definition of risk in the market? Does anyone know? What is the definition of risk in the market? It's uncertainty. That's the definition. So if we are operating in a highly uncertain environment, well, then we're operating in a high risk environment. That means you've got to have stop losses. That means you've got to use money management, because trying to ignore risk at this stage is folly. So this is, I think, a big takeaway for now. Understanding that this close over here is not a close for the week. It's where we are right now. As Tuesday morning's trades about to start, we're operating in a very uncertain environment. Now, this can clear up. By the end of the week, we may have a candle down here. Well, that's 2 weeks combining into a very bearish candle. Or you may have a close up here. Well, that's 2 weeks combining into a very bullish candle. If that's the case, maybe this uncertainty dissipates somewhat next week. But right now, we're in the middle of it. And that means you've got to protect your trading account at all costs. So that means stop losses, that means risk management, or it means sitting out until the confusion disappears. But risk management is absolutely vital always, but specifically in a high risk environment. Now let's go down to the daily chart and see what it's suggesting. All right, so let's take this out, and let's take this out because this scenario has changed up since yesterday. All right, this, take a look at this. Let's put in a trough here. And let's put in a peak here. So if these are our references, well, you can already see that this is now, we've got a lower trough. See that? So this is now a lower trough. So what's the big deal about this? The big deal is that we could go like this: trough, peak, and we make this a higher trough, and we make this a higher peak. Yeah, so up until this point, up until sort of HP, it looks like we've got some nice bullish action. But that now has been negated because we're not trending up anymore because we've actually got a lower trough here. So I don't know if this continues down. My feel is, you know, we're uncertain, but we might regain sort of the bullish momentum and push up here. The point is that the fact that we've got this lower trough pushing in, that's not good news again, because it is it means that the definition of trend has effectively been cancelled. It's been negated. Take a look at yesterday's candle as well. So we're looking at a daily. Yesterday's candle is a spinning top, which is keeping in the same theme that we've been discussing this morning. What's that theme? Uncertainty, right? So we do have bears trying to take price down yesterday. They lost control at the low. We had bulls trying to take price up yesterday. They lost control at the high. Where did we close? Well, we closed pretty close to the open, a little lower, but it's effectively an uncertain candle as well. So we've got a spinning top for yesterday, uncertainty. We've got a combination of two candles showing a doji on the weekly. That's uncertainty. We've also got price moving from zone 1 into zone 2. That's a step backwards. That means the positive momentum has actually waned. Okay, it's declined. So there's zone 1. Here's zone 2. Give me a moment. The market's just opened, so my system just hung for a moment. Let me put this in here. Okay, here's zone 2. Okay, so here is here's a step backwards. Take a look at the stochastic. Okay, the stochastic is dropping out of our upper quintile, right? So it's dropping below 20. In other words, our momentum indicator is starting to decline as well. That's not good news in terms of higher prices. So I think the theme is, well, we've lost our trend in an uncertain environment. We can reclaim it. We can go from zone 2 to zone 1. There's nothing, but I think the movement from zone 2 to zone 1 is necessary just to get some sort of certainty back into our into our scope. And we want this stochastic to get back into the 80 level. So it's starting to push down. The idea here is uncertainty. Uncertainty equals risk. Risk is the one variable you cannot ignore, because it's got an asymmetrical impact on your trading. Risk will always hurt more than reward will give you gains. It's just a 10% loss hurts more than a 10% gain. The way to think about that is if you've got $100, you lose 10%, that takes you down to 90. Now you're on 90, your next trade's a 10% gain, but that only takes you to 99. You're still $1 short from break even, okay? So there's an asymmetry there. The risk's always going to hurt more than the gain, and we are operating in a highly uncertain environment. That means we're in a high risk environment. That means be careful, okay? So you can see we're in this sort of quagmire, so to speak. Let's just go down to the hourly, and this perhaps offers a little bit of respite here, in that let's just take these out. So yesterday, when we looked at this in terms of the fib, we were in 76. Now we know we've lost the trend, right? Because we saw that on the daily. We've lost the trend. So you can see we were at 76 yesterday. It's now we've popped past 100% on the pullback. So that's the trend gone. So on the hourly chart, you can see we've got a bullish cross here. We've got a bullish cross here. So we've got the two signals. Now, if you're looking to trade this, there is a huge focus to be placed on the momentum. Does it hold this 80? Okay, or does it fold? Right? Does it hold or does it fold? If it folds, okay, that's that uncertainty playing its hand, right? If we can hold this 80 level, well then hopefully that pushes us back into zone 1. Then perhaps that uncertainty starting to dissipate. Then perhaps we're starting to get this moving up like that. But these are all big ifs, right? Capital I, capital F. So let's just watch this hourly. And the idea here is in order for certainty to come back into the market, well, we've got to get the hourly stochastic holding the 80. That's momentum. Or we have to get the stochastic holding the 20 and pushing down. One way or the other, it will bring some sort of certainty, either strength or weakness. But to trade in this sort of uncertain sideways type of movement, that's going to be tough. And that's, I think, we kind of saw a hint of that yesterday, but it looks like for today, it's a little bit more concrete. Okay, FXCM DAX. What time frame are you on there, Anna? Anna's just saying she's got a red Heiken-Ashi, which is very probable. These aren't Heiken-Ashis. These are Japanese candlesticks, but I can add in a Heiken-Ashi here. Let's pop this in. Yeah, the daily she's looking. So I'm certain that your chart's correct. So you can see it's so what Anna is saying is that, well, just also be careful. Heiken-Ashis, which are they are candlesticks. They're not. You can't get your standard open, high, low, close off of them. That's not what Heiken-Ashis are. They effectively trend following. Okay, they're trend following indicators. So the trend here is red, isn't it? So there is again another cause for concern, just because we've got this red Heiken-Ashi. So the drop from zone 1 to zone 2, that's a sign of weakness, and we've got the red Heiken-Ashi, and we've got this capitulation in the stochastic. We just need some sort of support to come in. Yeah. So and it's just saying I usually do the Heiken-Ashi with the zones. Yeah, sorry, the ones that I was showing earlier was the Japanese candles. But what's really good about using Heiken-Ashis and zones is you've got confirmation of 2 trend following indicators, don't you? So you just going back to this area. And of course, it's much easier to do in hindsight, but just as a point of example, you've got a whole lot of blue Heiken Ashes in zone 1, and you've got the stochastic holding out in that 80 area. That's what we want. That's what we want. That's what's lacking at the moment. So that's the environment we are in, which of course is not the most comfortable environment to be in. The market's open. We're about 7 minutes in. Let's give the market at least the first hour, I think, to breathe, just to see if the stochastic is able to build some sort of base, let's say, in the 80, and if the EMAs get that angle and separation. But I think the takeaway here is just be careful. There's heightened uncertainty. Any questions? Please go ahead and type those in. Any questions? Type those in. Just a reminder, we will do the US Open later, and of course we'll carry on with the scalping methodology. All right, nothing coming in, so let's conclude at this point, and then I'll look forward to speaking with you later in the afternoon. Thanks very much, guys.